Every year, I sit across from retirees who paid thousands of dollars more in property taxes than they needed to. Not because they made a mistake, not because they missed a deadline, because nobody ever told them the benefit existed. Today, I am going to fix that. The property tax benefit most retirees never claim. Here is what most people believe about property taxes. The bill arrives, you pay it. That is what you owe. That belief is costing a lot of retirees real money every single year. Many states, not all, but many, offer programs specifically for homeowners over 65. Senior exemptions that reduce your taxable home value. Tax freezes that cap what you owe even as neighborhood values rise. Circuit breaker programs that refund part of your taxes based on income. Veteran benefits that can be substantial. Surviving spouse provisions that most widows never hear about. Every one of those programs has something in common. You have to apply. They are almost never automatic, which means you can qualify. You can meet every requirement. You can own the right home, be the right age, have the right income, and still receive nothing because no one filed the paperwork. That is not a hypothetical. That is what I see in my office year after year. My name is Walter Barron. I am a licensed estate attorney. For more than 15 years, I have helped regular families deal with county offices, probate records, and the government paperwork that tends to pile up exactly when people have the least energy to deal with it. I do not sell investments. I do not manage money. My job is to make sure people do not lose what they spent their lives building, often because of rules nobody bothered to explain. And this one needs explaining. I want to tell you about a woman named Margaret. She was a widow in her 70s. She had lived in the same home for decades. Nothing fancy, a modest house, the kind she and her husband raised their family in. She came to see me because she was worried. Groceries, insurance, everything creeping upward every year, and income that was not. As we reviewed her finances, I asked whether she had ever applied for senior property tax relief. She looked at me like I had said something in a foreign language. Nobody had ever mentioned it. Not her lender, not her bank, not neighbors, not even family. After checking the local rules, she qualified. The savings were not dramatic, a few $100s a year. But here is what she said when we finished the paperwork. Walter, that is my grocery money. Not a vacation, not a luxury, groceries. That is when a number stops being a number and becomes something real. And that is why I want every person watching this to stay with me for the next few minutes, because you may be Margaret and you may not know it yet. Let me explain how property tax relief programs generally operate because the structure matters. Your property tax bill usually starts with two things: an assessed value, the number your local government assigns to your home, and a tax rate applied to that value. Most people never question either number. Both can sometimes be worth questioning. Senior exemptions typically work by reducing the assessed value. So instead of being taxed on the full number, you are taxed on a smaller one. In some areas, that reduction is modest. In others, it is significant. Tax freeze programs work differently. They cap the assessed value so that even if your home's market value rises, even if your neighbor's taxes go up, yours stays anchored. This matters enormously for retirees on fixed incomes living in areas where home values have climbed fast. Circuit breaker programs function more like a rebate. If your property tax burden exceeds a certain percentage of your income, you may receive a credit or refund. Different names, different mechanics, same goal: keeping eligible homeowners from being taxed out of homes they have owned for decades. The rules vary dramatically by state and county. I cannot give you the exact numbers for your location in a video. What I can give you is the list of questions to ask, which is coming in a moment. Let me walk you through the 4 mistakes I see most often because any one of them can cost you years of savings. Mistake 1. Assuming you do not qualify. I have watched people throw away application forms because they assumed their income was too high. Then they discover they actually qualified. The income limits are often higher than people expect, and the definition of income for eligibility purposes sometimes excludes certain types of retirement income entirely. Let the agency tell you no. Do not tell yourself no first. Mistake 2. Assuming benefits are automatic. They are almost never automatic. Age does not trigger enrollment. Ownership does not trigger enrollment. Even if the county has your birth date on file, that does not mean benefits activate on their own. You apply, you get benefits. You do not apply, you do not get benefits. It is that simple and that frustrating. Mistake 3. Forgetting about veteran benefits. I hear this constantly. I served, but that was a long time ago. As if the years somehow canceled the eligibility. In many states, they did not. Veteran-related property tax benefits can be among the most generous available, and surviving spouses of veterans may also qualify even after a spouse has passed. Time served is time served. It is worth checking regardless of when. Mistake 4. Missing deadlines. Property tax programs have filing windows. Miss the window and you wait another full year. The cost of procrastination here is not just delay. It is a complete year of savings that cannot be recovered. This is why doing it now, while the information is fresh, matters. Here's the part I promised you at the beginning. The one overlooked step that uncovers benefits most retirees never hear about. It is a phone call. That is it. A single phone call to your county assessor's office or local property tax office asking one question. What property tax relief programs are available for homeowners over 65? Then you stop talking and listen. Write down every program they mention. Ask if an application is required. Ask what the deadline is. Ask if income limits apply. Ask specifically about exemptions, tax freezes, rebates, veteran programs, and surviving spouse provisions. That call costs nothing. It takes maybe 15 minutes. And in my experience, many county offices genuinely want eligible residents to apply. They just do not come looking for you. You have to make the call. I have seen retirees spend weeks researching investments chasing a 3% return while ignoring a property tax benefit that could save them guaranteed money every year. No market performance required, no risk, just paperwork. That is not a comparison that flatters us, but it is an accurate one. Here is exactly what to do after this video ends. Step 1. Pull out your most recent property tax bill. Find the county name and the office that issued it. Step 2. Call that office or your county assessor's office and ask, what senior property tax relief programs exist and what do I need to apply? Step 3. Ask specifically about senior exemptions, tax freeze programs, circuit breaker or rebate programs, veteran benefits if applicable, and surviving spouse provisions if relevant to your situation. Step 4. Write down every program mentioned, the deadline to apply, and the documents you will need, typically proof of age, proof of ownership, and income documentation. Step 5. Apply early. Do not wait until the week before a deadline. Do it while the motivation is fresh. If making the call feels overwhelming, ask a family member to sit with you. Many communities also have senior centers or aging services organizations that will help you complete these forms at no cost whatsoever. Here's the thing I want to leave you with. These programs are not charity. They are not favors. They are benefits that legislators created, funded, and put on the books specifically for people in your situation. Claiming them is participating in the system exactly as it was designed. Failing to claim them does not make you noble. It just means you paid more than you had to. The retirees I have seen protect their finances best over the long run are not always the wealthiest. They are the most curious. They open the mail. They ask questions. They do not assume the number on a bill is automatically the final word. That habit, just asking, can be worth hundreds of dollars a year, year after year, for the rest of your life in that home. That money was always yours. This is just about making sure it stays that way. If this helped you understand something nobody had laid out clearly before, the next video on this channel covers more of the rules, deadlines, and government programs that affect retirement finances far more than most people realize. And please, share this with one person you know who is over 65. One phone call from them could make a bigger difference than they expect. This video is general educational information only and is not personal legal, tax, or financial advice. Property tax programs, eligibility requirements, deadlines, and income limits vary by state and local jurisdiction. Always confirm your specific situation with your county office or a qualified professional before taking action.